Good golly, the Miss Molly. Phew! So much for the end of the world yesterday. Once again, the real data from the real economy trumps all the negative news stories and rumors. The reality is that much of the day, your TV should be on mute. Let the numbers speak to you as they are the most important thing on your screen. Remember, stocks and numbers don't lie, people do. So mute your TV, listen to the conference call, and read those balance sheet, cash flow statements, and other printed material from sources like Reuters, Barron's, and other reliable sources like newsletters from Jim Cramer, Dennis Gartman, John and Pete Najarian, Guy Adami, Tim Seymour. The newsletter writers have a vested interest as they are often on the same side of the trade they're writing about as you, the reader. So it behooves them to write or they lose both the revenue from your subscription and their trading dollars. Most people in the news have no skin in the game at all and can say whatever they want without being worried about losing anyone money but you. Enough on our soapbox. There's plenty to talk about today in the world of stock. Let's start by looking at Europe and what's been beat up. Repsol, symbol REP, which we covered for you on our June 14th edition of Lunch at the Markets. The stock is down over 10% from the recent highs with oil ripping. The company is incredibly profitable, trades with an extremely reasonable PE, and has 3.6% dividend to boot. Check out the Lunch of the Market episode from June and take a look at Repsol today. We'll throw in Total, symbol TOT, from our June 4th episode of Lunch of the Market. Jim Cramer jumped on the TOT bandwagon last night in the lightning round, and it's never bad to have someone smart like Jim get on the same side of the trade with you. He believes TOT is cheap, and we couldn't agree more. Next, Thoratec, symbol THOR, THOR, is sitting right around resistance, and we think you can take a look at either getting long the stock, getting long in the money July 2011 calls, or our favorite, a call spread risk reversal for July 2011. To put on the THOR call spread risk reversal, get long the July 2011 25-30 call spread and then sell the July 2011 23 put against the call spread. The whole structure should bring in 30 cents and your max profit is the $5 between spreads. The 52-week high for THOR is about $46, so getting long here under 26 means that our 40% rule, where we wait until the stock is down 40% from the recent highs, gives you a green light to be long. We also pulled out the THOR chart and looked back a few years, and this is a level of key support for the stock that should indicate where to get long should it hold. Finally, if you'd like another way to play the aluminum trade, as Jim Cramer has been buying Alcoa for ActionAlertsPlus.com, you can look at TORM. Despite the massive rise in the stock today, it's still not back to its 52-week high around $14, and the stock trades with a reasonable valuations. Their last quarter was a beauty. Net income was 9 cents per share compared to a loss of 2 cents per share a year ago. Sales of specialty alumina products were up 21.7% year over year. The third quarter sales for their other products was up 34% year over year. Sales were up in the last 9 months of 2010 by 25.4% compared with 2009. EPS for the 9-month period is 51 cents per share, compared to a loss of 18 cents per share in the first 9 months of 2009. We think TOR Minerals, symbol TORM, should be on your radar. When we looked at it this morning, it was a lot lower. Apparently, now our office is bugged as well. It seems like someone caught a whiff of what we were revealing for today's show. No matter, we think this aluminum play is still a buy and will benefit from the same trends helping Alcoa. Thanks for joining us again today. Hope you are plenty long today and only your shorts are put spreads, which should all be careening towards zero at this point. This week is more than half over and so is December options expiration. Have a great day and we'll see you tomorrow.